Yeah, good. Well, hi, my name's Gordon and I'm with Jake. Jake and I are both directors of Hazelton Mountford in Worcester. And welcome to the what we hope won't be the most boring seminar that you've ever been to. And before we start, if any of you can see us, you might notice that we've got slightly bright shirts on. That's because we have a Zoom team meeting for the whole of our team every Tuesday, and each week we have a little theme that we do just to keep everybody motivated and happy and cheerful in this time. And today was wear a silly shirt. Um, Last week was bring a pet. I think the week before that was a silly hat. Um, and so that's why we're like this. So just wanted just to start by just telling you a little bit about what qualifies us to sit here and make this presentation. So just look at 2 minutes on who we are, so you know that who the people are that are doing the presentation, and then we will just spend some time just talking to you about how COVID might be affected, insurance might affect COVID. Um, so the so as we said before, Hazelton Mountford, that's us. I'm Gordon Hazelton and Jake is Jake Mountford, and we're the directors of the company. And we are the only independently owned insurance broker in Worcester with chartered status. That's just to do with the level of exams and qualifications that we've got. We've got offices in Worcester, which is our main head office. We've also just opened up in Evesham just the few days before lockdown, so that was quite interesting. And we've also got an office in the Isle of Man. We were established in 2008. 95% of our clients are commercial businesses, so we're not really in the main sort of household and motor, so we deal with sort of business people like yourselves that range from sort of small local retailers up to large international property owners. And like us, all of our clients, or most of them, have all been affected in one way or another by this COVID crisis. And we just wanted just to spend a bit of time talking to you about how insurance is affected by it. And the prompt for this was, there he is, the Chancellor of the Exchequer. A few weeks ago, when when they announced the lockdown and introduced all the various measures that they were bringing in, he made a statement in his press conference. He says that we're calling this a global pandemic, and we're making this a notifiable disease, so that will trigger your insurance policies. So in other words, the government said, there you go, we've made an announcement, so your insurance policies will now pay out for your losses as a result of COVID. And that caused absolute mayhem in the insurance market. And we just want to just talk a little bit about what was meant by that and what was caused by that. Now, here's the thing. When the Chancellor said it's going to trigger your insurance policies, what he actually meant was it was going to trigger something called pandemic insurance. That was what was triggered by the notification. So the question is what then is pandemic insurance? And basically, it's a specialist insurance policy that covers financial losses that are suffered from the outbreaks of pandemics. Now, the question is who buys that sort of insurance? Now, I've been insurance broking for 30 odd years. I'm a chartered insurance broker, and I've never had a Worcestershire business person come up to me and say, can I buy some pandemic insurance, please? So the people that buy that sort of cover are mainly large multinational companies, particularly in the leisure industry. So, for example, Wimbledon bought it following the SARS outbreak in 2003. They're paying a premium of about £1.5 million a year, and they're just in the process of having a payout of £114 million. So that is a very, very specialist insurance. So when the Chancellor said, I'm triggering the insurance payouts, he was actually talking about something that most of us don't buy. So I'm just going to hand over to Jake now, who's just going to tell us a little bit about the insurances that most of us do buy and whether they will pay out anything at all. Jake, I'll hand over to you.
Thank you. Yes. Cheers, Gordon. And apologies for the shirt, just to mirror what Gordon said earlier. I didn't win the competition, but good effort nonetheless. So yeah, nobody buys pandemic insurance, nobody that we know anyway. But most businesses do have, well, a lot of them do have what's called business interruption insurance. So I just want to go through some of the basic principles of what that is and what that's going to cover and how it might interact with this COVID pandemic that we've got. So first of all, what is business interruption insurance? I'm sure probably most of you know, but the main principle of the cover, business interruption, it goes hand in hand with insuring your property. You insure your buildings and your contents. You then insure the business interruption because it's following a loss, a physical loss or damage at your premises that means that you can't trade and you suffer a loss of income. And that's where the business interruption cover, that's the prime cover, that's what it's there to cover. So policyholders will say, well, I've got all risks business interruption cover, so that should be okay. Just go back one, Gordon, if you could. So that it's not all risks cover, again, as it says all risks, that doesn't mean every eventuality that ever occurs. All risks refers to all risks, what we call perils, where there's been physical loss or damage. For example, easily identifiable ones like fire, theft, flood, accidental damage, impact, various things. But the point is, there's been a physical loss there. Yeah, the virus, it's not tangible. It's not actually caused our buildings to fall down. So if you want to click onto the next one, so most people have got this business interruption as a primary cover. And so that doesn't, so if you've got just that, obviously there's no cover there for this issue, COVID, because there's no physical loss or damage. So a lot of business interruption policies, most of them will have what are called business interruption extensions. So I'll say a bit about those. The usual extensions, I've listed a few. I'll go through them. Denial of access. So that's if a neighbouring premises has an insured event happen, and like a fire, and it means you can't access your property, suffer a loss. That's what that is. Customers and suppliers, set by the same token, if they've had a loss and you're reliant upon them for your business, so it suffers a loss as a result, then that's an extension that's covered as well often. Same with public utilities. Somebody's drilled through a pipe, you can't trade, and that would be covered under a normal BI extension. So you see the pattern. They're all all these ones so far to do with physical loss or damage, where there's something that's occurred there, not an airborne virus or whatever, however it is contracted. So let's look a bit at the ones where there might be a glimmer of light. So as well as those extensions I've listed there are others that a lot of policyholders get, and they are, as listed, infectious disease, which Gordon can mention in a minute, denial of access, non-damage, I'll talk to you about in a sec, and then the public authorities extension. So if I hand back to you, Gordon, you can talk about the infectious disease one first.
Okay, so now bearing in mind that these types of cover, as Jake said, they are like little extensions to the policy that, again, I don't think, unless probably I was a hotel or something like that, no, I don't think I've ever had a client come to me and say, oh, can you extend my insurance policy to include infectious diseases, please? So these are things that insurance companies have sort of built into their policies as like little extras, because just like the rest of us, nobody had heard of COVID-19 back in December last year. And the insurance industry hadn't either. And the idea of insurance policies is that it, as Jake said, it covers events that people know about, that are predictable, that they can measure and charge a premium. Nobody out there predicted that this was going to happen. And the issue that we've then got is that then people are looking, scrabbling around, because everybody is losing out, and everybody's looking for some sort of compensation, for somebody to pay out. They're looking for help from the government. We're furloughing people. Look at that. So they're looking for the insurance companies to pay out. And the insurance companies hadn't actually predicted this. They hadn't actually thought, oh, this is going to happen, we'll charge a premium for it. So unlike the floods that we had earlier in the year, you know, everybody expected, the insurance companies had priced that in, they knew all about it. This was not planned for. So what there are is there's this infectious disease type extension that's on there. Now, when that cover was designed by the insurance companies, it was really designed to cover something that happens at the premises. So, for example, you've got a hotel, there's an outbreak of some disease in the hotel, and therefore they have to, the local authority come along, they close the hotel down, and you lose you lose income as a result. So most of the policies that are there out in the market are they list the diseases that trigger this kind of event, and you know, the things like, you know, tuberculosis and different things like that, and they're all listed in the policies because that's what insurance companies thought that they were meant to be insuring. But then there are some policies out there where, not by intention, but almost by accident, that the insurance companies use the word any notifiable disease. You know. So what's now happened is that there's all this stuff going about whether the policies will pay out. But the first trigger with these is, has the incident occurred at the premises? Yeah, and so, in other words, has there been an outbreak actually at the premises? And some of these policies do extend to include stuff within a certain short distance of the premises, or within the radius of the premises. Now, this sounds all very boring and technical, but the reason it's causing an issue is that it wasn't intended for that purpose. Because really the trigger of the loss that we're all suffering, right, is actually the government imposing the lockdown. So the reason why Hazelton Mountford's clients are struggling to pay their insurance premiums is not because Hazelton Mountford have had an outbreak of infectious disease in 4 Bank Street in Worcester. It's because the government has said nobody can go to work at lockdown, etc. And that's what's causing the damage, and it's become a global pandemic, as we know. And because it's the government action, it's a bit like war. So when you've got a situation like a war that breaks out, yeah, that someone might drop a bomb on your premises and causes a fire. Nobody thinks, oh, the insurance company is going to pay out for the fire. They look to the government to cover that, and it's a similar kind of thing. So what's happened is that the insurance companies are turning around and saying, "Oh, no, this is we're not going to pay out for this because this is not what we intended." So there's a bit of rancor going on there. But however, and we're going to come to this in a bit, there are some grey areas in that with some of these woolly wordings, where the insurance policies of contract, where there might be some payouts that are actually made. However, if your policy lists certain specified diseases that happen at your premises, then the bad news is, like our policy does, we're not going to get any cover, and neither we've got to look to the government for our compensation. But if you don't have that specific exclusion of the specific things, there may be, I say, and we will come to that in a minute, there may be an opportunity for some people to get a payout there. So, Jake, over to you.
Okay. So yeah, denial of access non-damage is another extension. I mentioned earlier about denial of access. That's one, and that's if there's an insured peril, fire, theft, flood at a neighbouring premises, causing you not to be able to access, and you're covered for loss of income as a result. Try not to get too wordy with this, just or boring. So, and then this one, so this is slightly different in that, as it says, non-damage. So there doesn't have to have been a fire at a neighbouring premises. If you are prevented from accessing your premises due to other reasons, like I've said there, where it's imposed by local authority or government, then that extension will, in theory, pay out. So that sounds great. That sounds the one. However, very simply, probably all of those extensions that you'll see, I don't know if there's been one without it, but all of those will have specifically exclude infectious diseases, because they've made most of those wordings tight and for the intention that they're meant for. So the next one is slightly more quirky. This doesn't occur much, but there's one called Public Authorities Extension. And it looks even better, this one. So this is, as I've put there, your inability to use your premises due to restrictions imposed by public authorities. And this extension specifically notes certain events, as you can see, a bit morbid: murder, suicide, food poisoning, vermin outbreaks, sanitary infectious diseases. So that looks really good. That's the one. It actually mentions it instead of excluding it. It says if public authorities say you can't trade because of an outbreak, that will pay, which sounds great. But the problem is very, very few insurers place this extension on their policies. I think Hiscox famously have it on theirs. They're one of the only ones I can think of. And although it doesn't exclude, it doesn't say this excludes global pandemics, the intention of it isn't to pick up government enforced, national pandemics. It seems like when you've got that wording in front of you, as a lot of, for example, Hiscox policyholders have, which we'll talk about in a minute, it seems like a thin defense saying, well, it's not our intention to cover this global pandemic, when you've got a wording that says if you can't trade because of a disease outbreak, you're covered. So yeah, there'll be some developments on certainly policyholders who've got that particular extension, and it'll just take time, but we'll talk about that shortly. If you want to click over. So we've talked about what could be covered and where the grey areas are. But the other things to think about are, what are the other insurance implications? What else can be done? What else do you need to think about as a business for your insurance? And I've put a few there. So a lot of businesses are going to suffer with a lower turnover, wage roll reduced, things like that. So if you've got a liability insurance policy, the premium for that is driven by wage roll and turnover. So if that goes down, it's only right that your premium should go down. Now, it's normal that's done annually. So you're supposed to give an estimate for your wages and turnover at the beginning of the year, and that's it. It doesn't get adjusted during the year. So if it goes down, unfortunately, you don't usually get a return premium. However, some insurers are stepping in and saying, we will look at that now because we realise businesses are suffering. So if your business has really suffered with a drop in sales, make a case to us about how much you think it's going to go down, and we will look at trying to give you a rebate mid-term. So it's worthwhile, if that's affected you, having a look at that and speaking to your broker to see if you can get some sort of saving on your premium. There are a lot of policies that are on a minimum and deposit basis, so it's pretty clear cut that you're not going to get any money back on those, but it's still worth asking the question, because the insurance companies on the whole aren't, I mean, some are trying to dodge claims, but they're trying to be as helpful as they can with things like this. adjustments and being flexible, whereas in normal circumstances it'd be different. Again, if you run a fleet of vehicles and you're not using any because businesses or you've taken a few off the road, you can what's called have laid up cover. So as long as those vehicles aren't taxed, you've got to apply to get them sawn, and you can get a rebate for not having them in use, and that can be helpful. So again, speak to your broker about savings that could be made there.
Shall I chip in on the vacant premises?
Yeah. Chip in on that,
Yeah. So one of the things that because I do a lot with property companies and real estate companies, but it actually applies to everybody who's got a premises, is in the small print of insurance policies is are restrictions and things that that you're meant to do if your premises become vacant, and if you don't do them, you can find yourself not covered. Well, what the insurance companies are actually doing at the moment is, because nobody can comply with these things, we're all, we're banned in our offices and what have you, do notify your insurance broker. But the insurance companies, they've all got slightly different wordings around it, but certainly most of the main ones that we do is like Aviva and Ageas and all those people are being completely flexible and understanding with people and saying, look, we understand you can't use your premises, don't worry, we'll still keep you covered. But don't forget to just check that with your broker, because the last thing you want when this horrible crisis is to suddenly find that somehow by doing what you think's best, you've avoided your policy. I say not a single one that we deal with has not been helpful and flexible over that. Obviously, I can't speak for every insurance company that every person puts their insurance with, but as I say, please do remember that and make sure that if you either as a property owner or your premises you're trading from, just make sure you've covered that off with your broker. Do you want to mention about working from home, Jake?
Yeah, just again, as we are at Hazelton Mountford, we've got one person in the office and 20 odd that are all now working from home. So it's just being mindful of making sure that your policy will cover your staff whilst they're working at home. And again, in the same way they're being flexible on vacant stuff, the insurance companies are automatically, allowing that, that cover to allowing that activity to take place. I mean, it is worth checking on your household policy. I haven't really looked much at that and what the implications are, whether or not they are happy with you effectively working from home, using part of your house for business use. But I'm sure that they'll also have the same flexibility, because so many of us are doing it. Then change in business activity, again, it's just being mindful. If some businesses have diversified, you've got restaurants that are just doing takeaway now, things like that. It just needs to be checked and run by your insurance broker. I've got a client who make gin, and they've diversified to making hand sanitizer, so which is in big demand, and they're doing quite well out of it. But so they're completely different. They're selling a drink, and now they're selling a sort of a chemical product that people put on their hands. So in that particular case, the insurance company wouldn't include it. They would not give the what's called products liability cover for this client selling hand sanitizer because of the regulations. There aren't many, so we had to go and get an additional policy to cover that activity. So it's always worthwhile just making sure that your insurance company are aware of what you're doing.
Yeah, I've had a similar thing with a client of mine that primarily does sort of business consultancy and things like that. He got contacts in China, and he basically managed to get hold of face masks and PPE equipment for the Isle of Man Medical Authority for stuff like that, and we had to sort of make sure we got proper cover, because it's all coming from China and that sort of thing. So again, if you are doing stuff, do talk to your broker about it to make sure that you've got proper cover there, because the last thing you want is to find yourself not insured.
Yeah.
Okay. So what Jake and I wanted to do now as the final slide before we did questions and answer really is just talk about some of the other stuff that's going on in the wider scene here that they do it. So the first thing is with regard to these insurance companies that are not paying out for people's business interruption losses. And as we said before, that some policies are very black and white. There isn't the cover there. The client didn't arrange the cover. The broker, it wasn't done. They weren't doing it. There are a number of these policies that are out there that look like they might have this slightly grey wording. It's no, it doesn't exclude pandemics. It doesn't exclude it, like some of the things that Jake and I were saying earlier. And the FCA, who are our regulator, have taken a great interest in that. And they are going to the courts to get a ruling on those policies. So rather than all the individual clients trying to claim against their individual insurers and the little guy taking on the big insurance company, FCA are taking that case up. And it is very much a question of watch this space. However, I was at a webinar with one of the UK's largest insurers on Friday, and they have basically been in discussions with the FCA, and they have basically said that they believe that these insurers will have to pay out. They might not have intended to cover this, it might not have been on their radar screen to cover it, but they the insurance company that I was with, they do have a few little policies that do have this cover, and they're saying they're paying out because they're saying that they're doing it. So if it is worth you checking your insurance policy and having a look, getting your broker to check it, and I'm sure, if you wanted to ask one of us, we'd be more than happy just to have a check. That's not a promise that you'll get your claim paid, but it is worth getting your claim in if you do have one of those types of policy wording. And there's a lot of health warnings on what I'm saying there. That's not a promise, and it's not a promise on the amount, but it's worth a go. And one of the things that you just put there is that there has been some bad press around some insurers regarding this. And I do think that some of them deserve it and some of them don't. And I'm in the industry. We've noticed that some of them, where they've got these vague wordings, they're not, we as brokers are trying to represent our clients to them, and they're not that. So, and I just wanted also just to talk a little bit about cost of this to the insurance industry, because we're all getting hit by this in all sorts of different ways. And you might think, who cares about a cost to the insurance industry? They're big companies, they can afford it. But there are some implications that I want to talk to you about. So, and some of them do affect us. So, the estimate at the moment is that the insurance industry is going to be hit by about £10 billion as a result of this COVID. That's in the UK, and about a third of that is going to be travel insurance claims. So, of course, if you've got a travel insurance policy, by the way, and had to cancel a holiday, don't forget that you should be able to put in a cancellation claim, providing you've got the right sort of policy there. So, about a third of it are travel insurance claims. Then another third are what's estimated that will be paid out on if the FCA ruling goes the way that the industry thinks it will, that will probably be paid out on these business interruption claims. But it's the remaining third of it where it all gets a bit interesting, and it's worth us just looking at in a bit more depth. And that is that the insurance industry is ready for a whole load of liability claims to come about. So that's things like because the ambulance chasers and people like that are already on this, and they're ready for the like we used to have have you suffered a PPI loss, or have you had an accident recently? They're ready for have you got COVID whilst at work? And so they're ready for a whole raft of that sort of thing to come in. and with us all beginning to sort of start looking at moving people back to work, back into the office, you know, we do need to make sure that we've, you know, that we've covered ourselves with that, because the last thing we want are nasty insurance claims coming in from some of these no-win, no-fee people trying to claim in that area. The insurance industry is also bracing itself for a whole load of liability type claims in the whole care sector. I mean, who knows what's going to happen? It's awful what's happening in there, and they're bracing themselves for stuff like that. And then the other one, which is quite an interesting one, is directors and officers liability insurance. That's a type of policy that covers directors and officers of a company for their own personal liability for whilst operating as a director, and they're expecting claims in that in terms of companies trying to trade whilst technically insolvent and all that whole complicated area that's all coming out as a result of government legislation. There are also, we've discovered as well, that there are a whole raft of insurance policies that are becoming difficult to buy. So if there's anybody that's involved in the property sector, for example, insurance companies are getting a little bit nervous around some of the stuff regarding vacant shopping precincts and things like that. And also surveyors who've been involved in valuations of properties and that type of thing. And the net effect of all that is that we've been warned that insurance is going to become harder to get, and it's going to end up at the same time as all of us are suffering with our incomes going down. We are being warned that there could be a situation where the premiums are ending up going up because of these factors, because the insurance companies are trying to balance their books. So that is just something to be warned. And again, that's the need of having a good broker who can make sure you've got the right cover, go to the market for you, make sure that you're not caught out in that area. So, and also again, looking for areas where you can get little angles and stuff like that. So I think that's the end of our formal presentation. So it's just over to questions. I haven't been able to see the chat box, so I don't know whether there's any questions coming or not.
Yeah, I haven't had any put in there yet, but just wanted to say firstly a massive thank you both to Jake and to Gordon. That was really helpful. Thank you so much for sharing all of that. Am I able to send everybody that's in the group the presentation slides? I forgot to ask that at the beginning. Is it all right?
Absolutely, yeah, of course.
Okay, brilliant. Oh, that'd be really helpful. So I will send around the presentation slides to the group just so that you've all got them. But has anyone got any immediate questions for Gordon or for Jake? If you've got any questions, any comments, any bits of feedback, pop them in the chat.
I thought, oh, there's one there, and I suddenly realised it was Jake saying, "Cheers, James."
Cheers, James. Yeah. Thank you, by the way, James, for mentioning about household insurance, because it just came to me whilst I was talking about it. So
I always like to give everyone just a minute, because I realise that it can take a minute just to type, but I'm going to go with no questions, which obviously means you did a fantastic job. So well done.
I thought that always sent everybody to sleep.
No, definitely not. No, I think you did an absolutely brilliant job. Thank you so much. It was really, really clear and really concise, easy to understand. So thank you. Yeah,
it was our pleasure.
Just people saying thank you very much. So what I will do then, guys, I will send the presentation slides around to everybody. I was going to ask for one small favour alongside that email as well. Those that have been members for a while will be aware that we do a quarterly economic survey, which everybody moans about. Do it every quarter, and we always pester you. As you can probably imagine, this one is probably one of the most important ones we will ever do. And there are a lot of questions in there about coronavirus and the impact it's had on your business. I will put a little link to fill that survey out on the email. If you've got 2 minutes to complete it, I would really appreciate it as well. And just to let you know of a couple more webinars we're doing. We've got a networking webinar taking place on Thursday at 12 o'clock. We do a weekly networking webinar, really similar to this, but we kind of just give everybody the chance to have a little chat to each other. So it's just informal bit of networking. If you want to join on that one, let me know. And also might want to share around to any of your colleagues that are within HR, or that are going to be the people responsible for getting people back to your offices. We're doing a webinar next Wednesday at midday, which is going to be based around risk assessments. So obviously a lot of companies at the moment, before they're going to be allowed any staff back, are going to have to do risk assessments, which I know is a tricky area and an area that people might not know very much about. So if you have got somebody in your business that's going to be responsible for that, or if you speak to anybody that's like, I've got to do this, I don't know where to start, then do encourage them to have a little look at that one as well. But that's it. Then I just wanted to say a massive thank you both to Jake and to Gordon, and thank you all for joining.
Thanks, Olivia. Thank you.
All right, guys.
Cheers,
Thank
everyone.
you so
Thank
much.
you.
See you soon.
Cheers. Bye.
Thanks, bye.
Bye. Bye.